A new survey from the Angus Reid Institute suggests the number of Canadians struggling with their monthly mortgage payment is on the rise, along with worries of potentially higher payments when it comes time to renew with their lender. I mean, that doesn't sound very good, but it's not overly surprising, and it's something we're starting to read and hear almost every single day. The reality is, people are struggling to pay their mortgages, and many will be displaced from their homes. And I'm not talking only about people who own their homes, I'm also talking about those who rent from landlords who can't pay their mortgage. In Canada, or at least in the city of Toronto, there tends to be a landlord versus tenant mentality, and this is in no way a win-lose scenario where tenants come out on top. This is most certainly a lose-lose scenario for everyone involved in real estate, whether they own or they rent. Although there actually has been one winner over the course of the past year and a half, and that's the cash buyer who isn't concerned about mortgage rates. They're just getting a discount on the price compared to 3 years ago. Now, I want to hear from you, so let me know in the comments if you think we're going to see a lot of people become forced sellers. My name's Macallum, and I'm a real estate agent and team leader in the city of Toronto. And if you want to chat one-on-one, go to the first link in the description to book a meeting with me. Around 15% of borrowers say they find the financial aspect of their mortgage very difficult, up from 11% in June and 8% in March. And I'm thinking to myself, well, 15% doesn't actually seem that high given all the mortgage holders all across Canada. But then we need to consider that these are the people who are finding their mortgages very difficult to handle, not just difficult or annoying to deal with higher costs. These are homeowners who may be on the edge of becoming forced sellers. And we also want to consider that this percentage has almost doubled from 8% in March to 15% today. And 79% of survey respondents are worried or very worried they will face higher payments when it comes time to renew their mortgage. And if you want to check out a more in-depth video on mortgage renewals, click the link in the video that just popped up at the top right corner. James Laird, who's the co-CEO of RateHub, clarified what we kind of already know, but may not consciously think about all the time. The first dollar in every household budget does go to that shelter payment, whether it's a rent payment or a mortgage payment. So what's happening is things are being squeezed out of the budget. The payments are being made on time still, but there's less money for other very important things like RRSPs and RESPs. At the end of the day, housing is the most important expense we have in our lives, and we'll do anything to keep our homes. And if you're finding this video to be a little bit doom and gloom for you, I don't blame you. It's not a very uplifting video. But that's about to change because the stress test is here to save homeowners. The stress test was put into place to ensure buyers didn't become over-leveraged and protected against defaults. Essentially, it's used to protect the buyer and the lenders so we don't put too much massive stress on the financial system. And it's important to understand the calculation. So to calculate the mortgage stress test, take 5.25% or your rate plus 2%, whichever is higher. So if you were to buy in 2021 with a rate below 3.25%, you would qualify at 5.25%. But now, with interest rates ranging from 4.5% to 6.5%, you'll be qualifying at 6.5% to 8.5%. Let's take the example of buying in 2019 with a 2.5% rate because that's more relevant for today. You'd have to qualify at 5.25%, which is great because you should, in theory, be able to support the property if rates go up, which they have. In the same scenario, in 2024, the buyer who purchased in 2019 at 2.5% is looking at a rate closer to 6% if rates stay where they are over the next year. That's only 0.75% higher than their original stressed amount. In 2019, instead of qualifying at 2.5%, they had to qualify at 5.25%, which is ultimately saving them in 2024 when rates are higher, which they likely will be. But of course, though, there are some caveats to this. The borrower must stay with their current lender in order to avoid the stress test at renewal. And of course, the lender must allow the borrower to renew. Overall, I think a lot of tenants and homeowners are going to lose their properties over the next year or so. Not all by power of sale, foreclosures, or bank-owned properties, etc., but just by becoming a forced seller. But many will be safe because of the implementation of the stress test when they originally bought.